The influx of stimulus funds into childcare businesses presents an opportunity to invest in and show appreciation for your hardworking staff through bonuses or pay increases. This video on pay increases and payroll taxes will walk through ways you can offer these financial incentives and examine the long-term implications to consider to protect your business. The information contained here has been prepared by Civitas Strategies and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information are not intended to create, and receipt does not constitute, an attorney-client or any other advisory relationship. Reproduction of this information and recording of this content, including the use of AI, are expressly prohibited. Only non-commercial uses of this work are permitted. As a child care program business owner, you value your employees and want to compensate them for the essential services they provide. However, you also know that navigating pay increases for new and existing employees can be tricky. Ultimately, offering bonuses and pay increases can impact your business's bottom line. In today's conversation, we will review ways you can offer pay increases and examine the tax implications as well. There are a few different types of pay increases that you can consider for your program staff. Each type of pay increase will have a different impact on your business. The first is bonuses. A bonus is a limited payment that temporarily increases your employee's income, but there is no future obligation to award a bonus again. This type of pay increase can be useful when seeking out new staff members or as an incentive to current employees to stay with your program. You can choose to award a bonus to a new employee upon hiring or after they have successfully completed 6 months of employment. You could also choose to provide bonuses seasonally, such as before the holidays or at the beginning of summer. Another way bonuses can be used is as a way to recognize employees who have consistently exceeded expectations by working under unusual conditions or who have completed a certain number of professional development hours. Bonuses can boost overall staff morale and are worth consideration as to how this expense can have big benefits to your program. Another type is a temporary pay increase. Temporary pay increases are just that, an increase to a person's pay rate for a temporary time. This type of pay increase is meant to last a short time frame, with a clear beginning and ending date. Perhaps you have an employee who you want to reward for their performance during a difficult time at your program. You could increase the employee's pay for the next 6 months, but make sure the employee knows that their pay will return to the original rate when the period ends. Clearly communicating in writing with your staff member is critical when choosing to use this type of pay increase. You would hate to lose a valuable employee over a temporary pay increase misunderstanding. You can also offer a long-term pay increase. Long-term pay increases are most desirable from an employee's perspective. This type of pay increase permanently raises the person's base level of pay without any planned reduction. From an employer's point of view, a long-term pay increase can help you retain valuable employees and establish your program as a desirable place to work. However, raising your employees' pay must be a sustainable business practice. Creating a pay scale helps to ensure that pay is fair and equitable across your program. Not only is a pay scale a useful business practice, but it is especially helpful when considering pay increases. As you look at raising compensation for your employees, and especially when you are hiring new employees, it is important to review everyone's wages. You want to avoid what's known as wage compression. Wage compression can happen when employees who have been working with you for some time make less than the new employees just starting with your program in a similar type of position. Sometimes wage compression happens when the demand for workers is greater than the supply of workers, which results in newly hired employees making higher wages than your current employees who are at the same level. This can happen because the criteria you use to set up your pay rates are outdated, unclear, or even too broad. Not only do you want to avoid wage compression because it's inequitable, but it can also cause challenges between your newly hired and current employees, resulting in your existing employees leaving your program. Review your pay scale at least annually to make sure that it is comparable to current market rates. It's also a good idea to review your pay scale whenever you hire a new employee. One way to collect market rate information is to review up to 10 job postings for similar positions from similar childcare businesses in your community to learn how much they are paying. You can also look at some online job search sites where you can get a general idea of the salary by the position listed in your area, as well as compare it to other areas and communities across the country. As you create your pay scale, you should include the education level, qualifications, skill levels, and experience of your employees. Also, consider the variations in the roles and responsibilities of each position in your program. To begin, gather the job descriptions for each role in your program. Be sure to think about the key qualifications and responsibilities required for each role. Next, consider each position based on the required qualifications and/or certifications, the responsibilities, and the role. Then rank these positions using this information. Group similar positions together and sort them into tiers. Next, research salaries offered for similar positions in your area and find an average rate for each tier. Establish a range of pay within each tier and have the range span from an entry-level person, about 75 to 80% of the market average, to a highly skilled person, about 120 to 125% of the market average. Finally, assess employees based on their skill level, seniority, experience, and education to decide if they should receive entry-level, average, or highly skilled level pay within their assigned tier. Be mindful of the associated costs when considering increasing employee pay, either short or long-term, as you, the business manager, must be prepared to cover those costs. You will need to compare your current pay costs with your new pay costs and include both rates of pay and payroll taxes. Determining the increase in costs when considering employee pay helps you make the strongest decision for your business. To begin, calculate the current wages that you pay your employee each week based on the following calculation. Total hours worked per week times current hourly rate equals current wages per week. For example, you have one full-time employee that currently earns $10 per hour. Therefore, 40 hours per week times $10 per hour equals $400 at current weekly wages. Be aware of the increase in payroll taxes that will accompany an increase in pay that you, as the employer, will be required to pay. Federal Insurance Contributions Act FICA taxes, 6.2% Social Security tax, 1.45% Medicare tax, which is withheld on all of an employee's wages. Use the employee's wages multiplied by the tax percentage to calculate payroll taxes. Current wages times 6.2% or 0.062 will equal the Social Security tax. Current wages times 1.45% or 0.0145 will equal the Medicare tax. Let's practice by using our previous example. Here's how to calculate payroll taxes for a full-time employee making $10 per hour. 400.00 times 6.2%, 0.062 equals $24.80. 400.00 times 1.45%, 0.0145 equals $5.80. This equals $30.60 taxes per week. To determine total current costs, you will need to combine the total wages paid to your employee with the total payroll taxes owed on those wages. By continuing with our example, the total current cost is $430.60 per week. 400.00 total wages plus $30.60 total payroll taxes equals $430.60 total cost. After you've calculated your current costs, then you need to calculate the new costs after you've increased your employees' rates of pay. Let's practice by saying you want to give your full-time employee an increase from $10 per hour to $12 per hour. You've already calculated the total weekly cost associated with $10 per hour, so you need to make the same calculations using $12 per hour as your rate of pay. New wages would be 40 hours per week times $12 per hour equals $480 total wages per week. New taxes would be $480 times 6.2% Social Security tax, 0.062 equals $29.76. 480.00 times 1.45% Medicare tax, 0.0145 equals $6.96. The total would be $36.72 taxes per week, for a total new cost of $516.72. Let's find the difference between the total current cost of $430.60 and the total new cost of $516.72. To learn your total increase in weekly costs to raise one full-time employee from $10 per hour to $12 per hour, subtract the total current cost from the total new cost. $516.70 total new cost, $430.60 total current cost, equals $86.12 increase in cost. In this example, the total employer cost per week increases by $86.12 when giving this employee a $2 per hour raise, or $4,478.24 per year, multiplying the weekly cost by 52 weeks in a year. Increasing employee pay through either bonuses or short-term pay increases requires that you are prepared to handle the costs. You must make sure that you have the funds available for either wage increases or one-time bonuses. To decide how much tax to withhold for bonuses, there are two ways to consider it. One, you can calculate the taxes owed on your employee's bonus by using a flat percentage of 22% for supplemental pay, regardless of your employee's income tax withholding rate. This method is easiest when you choose to pay your employee apart from their normal wages. For example, $1,000 bonus times 22% equals $220. Or two, you can add their bonus to their regular pay. You can treat the total amount as one payment, and then calculate the payroll taxes just as you normally do. For example, $1,000 bonus plus $1,200 regular paycheck equals $2,200 combined amount. To calculate the payroll taxes, multiply $2,200 x Social Security tax 6.2% 0.06 equals $136.40. $2,200 x Medicare tax 1.45% 0.0145 equals $31.90. Total payroll taxes on combined amount equals $168.30. To determine the payroll taxes owed on just the $1,000 bonus, follow the same calculations, but use $1,000 as the total wages. 1,000 times Social Security tax, 6.2%, 0.062, equals $62. 1,000 wages, x Medicare tax, 1.45%, 0.0145, equals $14.50. Total payroll taxes on just the bonus portion of payment equals $76.50. Combine the payroll tax amounts with the federal income tax withholdings per your employee's withholding rate to calculate the withholding amounts for bonuses combined with regular pay. Knowing the amount you will owe in payroll taxes will help you determine how much you will need to put aside so that you have funds available when you need them. You can take the amount that you estimate you will owe and divide it over the time period that the wage increase will cover. For example, from our previous exercise, if you were to raise an employee's pay rate by $2 per hour, you would have a new weekly cost of $516.72, which would be $26,869.44 per year. To cover the total costs of this employee's new salary, you would need to have $2,239.12 per month. This might feel like a lot in total, but the actual increase was just $373.19 per month, or a 20% increase. From our example, plan to set aside at least an additional $373.19 per month to cover the additional costs for this employee. Thank you for joining me for this discussion today. If you are interested in other helpful resources, information, and guides, visit childcare.texas.gov to find these on various topics in both English and Spanish. There you can also sign up and register for free one-on-one business coaching. And be sure to visit the Civitas Strategies YouTube channel for more valuable resources to support you and your business.